It's time for my monthly Murrieta, Temecula, Menifee Valley housing market snapshot. There is lots going on these days. Interest rates have actually gone up recently, and I'll give you the details on that. The upcoming election has a lot of buyers hesitating, and sellers are having to be more patient. And a lot of Americans have been moving into disaster-prone areas, making insurance premiums rise. And I'll be discussing the natural hazard risks in our area of Riverside County. So we're going to get right into it today, starting with the mortgage interest rates. So as you can see here on Mortgage News Daily, this article, mortgage rates spiked at their fastest pace in months on Friday following the jobs report, and yesterday added insult to injury, making for a total increase of nearly 0.3% or 0.375 in the average top tier conventional 30-year fixed rate. Actually, buyers have been surprised by this lately. Everybody's expecting rates to keep trickling down because we just had the first rate cut in a very long time, but actually the opposite has happened recently, and we will talk about why. So this article, it goes on to say down here that moves of this size are rare, but less so when the market gets a big piece of surprising information after hitting a longer term high or low. What is this surprising piece of information that we've gotten recently? Well, this article is going to go on to describe that. The US economy added a whopping 254,000 jobs last month, which was almost twice as what was expected. Economists had projected only 140,000 jobs that were supposed to be added in September. So this 254,000 jobs that we saw in the numbers, I think it kind of startled the markets a little bit because we just saw the first Fed interest rate decrease that we've seen in a long time. But if we keep getting strong numbers like this, the further decreases that we're expecting over the next few months through the end of the year may or may not happen. We'll have to see, but I think that's why we've seen a jump in the mortgage rates. I do want to say something important about these jobs numbers, that they, in my opinion, they are hard to trust because there are often revisions. Looking at this article here, they point that out as well. So when looking at the monthly jobs report, it's important to keep in mind that data is volatile, it's fluid, and it will be revised as more comprehensive information becomes available. They underlined that part, not me. So they are always revised. They go on to say that it's difficult to get an accurate first-time read on the labor market, so we always want to have some healthy skepticism. Here is a perfect example of why I'm skeptical. This New York Times article, if you recall, this happened fairly recently. The US added 818,000 fewer jobs than reported earlier. So the Labor Department issued revised figures for the 12 months through March that pointed to greater economic fragility. So where does the 30-year fixed mortgage rate sit today? Well, I like to use this website called Mortgage News Daily, and they have it at 6.61%. If you recall, we were over sevens for quite a long time, but more recently, when it was anticipated that the Fed was going to be lowering rates before that happened, we were down in the low sixes. So this is quite a big increase. Keep in mind, this is like an average of a lot of lending companies' rates. My preferred mortgage brokers typically do have a little bit lower rates than the average lender. That is a saw, and I'm having my backyard completely redone. So if you're hearing random music or sawing in the background, that's what it is. I'm actually thinking about making a video about it, like my experience, because I mean, I gutted the entire thing, all the concrete, all the trees. I have a small yard, but it was a huge project. Maybe we'll put up some pictures or whatnot. But if you want me to make a video on my experience doing the backyard with some kind of tips and kind of how things went, let me know down below in the description. I'm pondering doing that. We're going to look at one more interesting, to me, article for the day, where Americans have been moving into disaster-prone areas. So this is a New York Times article. I like these kinds of articles where they have these nice interactive graphics. And as you scroll down, another graphic comes into play, which I think has some very interesting information. This shows where over the past 2 decades that Americans have been moving to, and they have been moving to the south south and the west over by us. So a lot of folks, especially in the Northeast, have been moving like to Florida since the year 2000. Florida's population has increased by millions. They have been moving to Texas, like Houston and Austin, and they've been moving to Phoenix. And then here we are over here, Riverside County. So the kind of interesting thing is that I wanted to talk about the natural hazard zone risk in our area. And I actually think of a lot of these areas with the bigger circles that we're looking at, that we are one of the lesser risky areas. Like down here in Florida, I mean, you know, every year after year, the hurricane season is so bad. So definitely high risk to live there. Houston, major hurricane risk there. Austin has a lot of heat risk. If you remember when it was super hot and they lost power and it was like a disaster. And then Phoenix this year has been topping records. They had over 100 days of over 100 degrees in Phoenix, which is crazy, just straight days. And then we're over here in Riverside County, and I want to scroll down to the next graphic, which I also found interesting, which is where people are moving out of. So we're here. Los Angeles is here. This is probably the biggest circle on the entire map of people leaving Los Angeles. There's a smaller circle here. This is Orange County, and there's a even smaller circle here. This is San Diego. Lots of people moving from these red areas over to our area. And San Francisco as well. A lot of red or orange, whatever you want to call this color. A lot of these folks are moving down to our area too. A lot of these folks in the San Francisco area as well are moving east of Sacramento. I want to clarify that the size of these circles being so large, like this Los Angeles circle being as large as it is, means that a lot of people are moving out of there. If it's a smaller circle, fewer people are moving out of there. So I just kind of wanted to clarify that a little bit. So back to these folks that are moving to the east of Sacramento area, which is at the base of the Sierra Nevada mountains. The article actually goes on, it discusses some of these really high risk areas like we just went over, like Florida, like Houston, like Phoenix with the heat. And in California, it actually doesn't discuss the natural hazard risk in our area, but it does touch on this area east of Sacramento that's at the base of the Sierra Nevada mountains, because they have very high fire risk there, and it's a very wooded area. They've had a lot of issues. So far as our area goes, there's two main hazards that I consider to be a threat, and one is fire, and we do have a lot of what they consider high or very high fire areas and neighborhoods, and earthquakes. There's a lot of fault lines that go all through California. We got to do a big knock on wood about that. But there has not been a major natural disaster in our area, not like you see in Florida or these places where a lot of people die. We have the fires, we've had smaller earthquakes. Our last big earthquake was in the 90s, the one that was in Northridge, which is up in LA. It's quite a ways from us. So our area, we are not right on that San Andreas fault. That's the big one in California. We are a ways away from it. Also, the fires, for the most part in our area, they normally are extinguished pretty quickly because it's brush, and assuming that it's not very windy, we do have a lot of resources, a lot of aircraft that are doing the drops when we do have a fire. So normally they get it contained pretty quickly. And if you're in a regular neighborhood, I mean, I just haven't heard of a situation in our local area where you didn't have notice to leave. A lot of times it starts out in Camp Pendleton or starts out, by La Cresta, where it's this huge Cleveland National Forest Reserve. A lot of times it will start out there, and then it will kind of make its way towards civilization. So we have a lot of warning for that sort of thing. The other thing I want to touch on is earthquakes. I think that's the big one that most people worry about, because that one can come as a surprise. We have no warning for that. It's not like, a fire starting in the distance and we've got a day to, be watching it. But I also feel, knock on wood, okay about our area in regards to earthquakes, because we do have a newer housing stock, and the building codes, I do feel like, have been improving over time, and we do do have a lot of things built into our building codes and our current construction here that I think is going to help if we do see the big one. So like we've got some of our homes, the framing is bolted into the foundation. We have some post-tension slabs within our foundation, especially if you're in like a liquefaction area, which just means that you have a little bit looser soil. So I personally would expect us to fare okay because of our newer housing stock in an earthquake, but again, we just knock on wood about that. So kind of in conclusion on this map, I wanted to point this map out to you because it actually kind of makes sense for what's going on in our local real estate market, how a lot of people have been moving here, and I think that's why our local market, because all real estate is local, has been holding up a lot better than other areas throughout the country, because I'm hearing a lot about stale listings and days on market, like houses over 60 days increasing a lot, hearing a lot of price reductions in areas, really low buyer activity. We are seeing a cooler here. I can definitely say that buyer activity is down, but from what I'm hearing in other areas, we're not seeing that reflected in the numbers yet here. Okay, now we're going to go over the stats for Menifee, Murrieta, Temecula. Like we do every month, we only analyze single family homes to keep it simple. So we're going to start with the median sales price and starting with the city of Menifee. Month over month, there was an increase in the median sales price in Menifee of 1.9%, or a little bit over $11,000. And year over year, Menifee is up 4.9%, or $28,000. Moving on to Murrieta. Murrieta has our only price decrease. It went from $725,000 month over month to $710,000 in September. So that was a month over month decrease of $15,000 in Murrieta. Year over year, Murrieta is up 6.4%. It's actually up the most of all of the three cities at $42,500. Moving on to Temecula. Temecula has the largest month over month increase. It went up to $800,000 on the median sales price in September, or an increase of 4.2% month over month. So that is an increase of over $32,000. So I do expect that to settle back down a little bit next month. That's normally what happens when we see a big pop, is the next month will be somewhere in between the two numbers normally. Year over year, Temecula is actually up the least of the cities in this month's market report at 3.9%, or $30,000. Okay, moving on to closed sales. We have a steady downward trend month over month across all three cities. So it's actually kind of rare that all three cities are going in the same direction, but as far as closed sales go, that's what's happening. So Menifee month over month closed sales are down 33.5%, or 58 homes. So that month over month is a big decrease, and that is more than we would normally see seasonally. And I kind of think that this might be an election related situation, because I have heard a lot of people talking about they want to wait to do things until after the election, because the world, it might end. So after the world doesn't end, the number of closed sales will probably pick back up. We'll see. Year over year in Menifee, closed sales are up 10.6%, or 11 homes. Let's take a look at Murrieta. Not a lot of news here. Month over month, it's down, but it's only down 3 homes. Year over year, it's down 5 homes, or 5.4%. Lastly, Temecula month over month is down 18 closed sales, or 17.6%. And year over year, it's up 0.63%, which is 5 homes. So that's still fairly flat as well, but up just a little bit. Moving on to median days on market, starting in Menifee, month over month, it is taking 3 fewer days to sell a home. Year over year, it's totally flat. It's taking 16 days to sell a home now, and it was taking 16 days to sell a home on the median in Menifee 1 year ago. Moving on to Murrieta. Murrieta has kind of a big spike up, actually. It is taking 6 more days month over month to sell a home in Murrieta, or 19 days. And year over year, it's taking 4 more days to sell a home on the median in Murrieta. Last but not least, we've got Temecula, and in Temecula, it is also same as Murrieta, taking 6 more days to sell a home, but in Temecula, it's only taking 16 days versus Murrieta's 19, so still pretty quick on the median to sell a home in Temecula. And year over year, it's taking 2 more days, so a little bit longer year over year to sell a home in Temecula and Murrieta, but not by much. Maybe I'll show you a before, a during, and a current status of the backyard pictures. Maybe we'll throw those up there if you're curious. By the time this is published, it will not be complete, so I'll have to show you that later. Moving on to active listings, starting in Menifee, month over month, Menifee is up 15 active listings, or 4.4%. Year over year, it's up 77 active listings. Year over year, we're quite a ways up on all 3 cities. Moving on to Murrieta active listings, month over month, we're up 20 homes, and year over year, Murrieta is up 74 homes. And Murrieta, by the way, has the largest increase month over month in active listings of 6.6%. Active listings in Temecula is my only city that is down 2.9%, or 8 homes. And year over year, it is up, Temecula is up 42 homes. The last stats are the most interesting to me. So we're gonna look at new listings, and new listings are down across the board. And we're also gonna look at months of supply. Months of supply is increasing across the board. New listings starting in Menifee, month over month, new listings are down 59 homes, or 28.9%. So really plummeting. Year over year, we're up 3 homes. So we're still up as far as new listings go compared to last year's anemic amount, but month over month, we are down across the board, as I said. Moving on to Murrieta new listings, month over month, we are down 6 homes, or 4%, and year over year, we're still up a little bit, 13 homes on new listings. New listings in Temecula, month over month, is down 20 homes, or 15.3%, and year over year, it's still up as well, 20 homes. Last stat that we're gonna go over briefly, and I don't have a slide for this. We need to start making slides for this because it's an important stat. Months of supply, how long would it take to sell through every home on the market if no new available listings were to come to the market? So months of supply, it is increasing across the board, and this is an important stat because it indicates, you know, whether we're in a seller's market or a buyer's market, and we've been in a seller's market for a really long time, and we are starting to trend more towards a balance or even a buyer's market. So seeing a lot more cities in the 3+ months of supply range, which we have not seen for the past many years. I don't know if how long you've been watching my market reports, but you know, back in 2020, 2021, I mean, there was many months where we had less than 1 month of supply. Like, it was absolutely anemic. So now 3+ months of supply is definitely increasing. So Menifee, we have 3 months of supply exactly. And Murrieta, we have 3.4 months of supply. So we have the highest months of supply in Murrieta. And then Temecula, we have the least months of supply at 2.9, but it's all hovering right around that 3 months of supply. So we are starting, you know, once you get to 4 or 5 months of supply, that's when we start seeing a buyer's market. So we're definitely shifting into balance or towards buyer's market. Currently, it's going to be interesting to see what happens after we get past the election. Let me know if you think that's going to affect the housing market down below in the comments. And as we roll into kind of the slower holiday season as well, we'll be bringing you the stats as we continue out this year. Thanks as always for watching. See you next week. Bye.